Good morning. My name is Scott Rudler, Chief Strategic Officer at t3live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we did see European and Asian stocks rise after Turkey raises interest rates. Our futures now basically flat to slightly negative after they were up big overnight. So what are we attributing this to? Could it be concerns about the Fed rate decision we have later today at 2 o'clock?
I'm not sure if it's that, because most think it's going to be a $10 billion taper because they want the Fed to stay the course. But I just think the market's confused that, we're getting some negative numbers, some negative economic numbers, and, some are making excuses. Oh, it's the winter. Like the winter doesn't happen every year, whether it's the jobs number or yesterday we had, what was our basic materials, but the numbers just haven't been good. So everyone's trying to make excuses. You go to the actual chart of the S&P, and that's really where we're going to have to look to see what the story is here. And this intermediate trend held here. We talked about the 100-day in 1772 for fast, active traders that trade for cash flow or P&L. This was your way to get out of the trade when this accelerated trend broke. And now we're trying to figure out, can we play a bounce? Can we go back up to 1811, 1812? Right now, like last night, like you said, the futures were above 1800. It looked as if, that rate hike would put some, I guess, just let people think a little bit easier about the emerging markets. So with that said, not the case early this morning. So I guess if we get some strength into the Fed, or after the Fed speaks, if we were to break above 1795, we could see that push up. But if we are red today and we stay red and we don't get any bounce there and we start to break below it, you're going to see some volatility pick up. You have the 200-day all the way down here. So this little lower range is the range that we're going to navigate.
Well, we're going to turn the spotlight on high beta tech, which remains mixed, and see what opportunities we have lying here. Let's start with Netflix, which is looking among the best. Had a nice run to new highs yesterday and closed on highs. So I'd imagine this one will be high on your radar today.
Yes, and if it was on it yesterday, you caught a really nice trade. And this is what we've been trying to, as traders, you want to see individual stocks be able to do what they want to do without the overall market behind it. And Netflix came out with numbers, and the numbers were really good. And then you had 3 days of consolidation above the earnings gap. So it was a good setup. So it's good to see good setups actually work out. So if you look here at the chart, this is Netflix. Netflix had a big gap up. Here's your doji. Okay. Then after 2-3 days of consolidation, consolidating this big move, a quick little move into the gap that came back up. Yesterday, you had 3 different areas to at least cover shorts if you were short, or maybe buy, and that was your move. So that was a nice setup. So not sure if it just continues today with a day 2, but if it were to trade above yesterday's high of 407.41, why not? It seems to be one of the most powerful stocks out there.
Well, speaking of looking for stocks showing relative strength, Tesla did as well. It held the 8-day, holding in really well as markets went and tested the 100-day. So that one held in really well as well.
Right there, you just gave the definition of relative strength. Stock that held higher while the markets came in, so that's where we should focus our attention. I know it didn't come out with earnings yet, so we still have earnings risk. But anyway, you look at the chart, this chart looks good. Like you said, it held the 8-day, flagging right here after a powerful move. That's when they said, I think, demand was increased by 20%. Remember that red dog reversal right there? But anyway, push up, sideways action, was up a lot yesterday. I would say if it starts to get above 179-ish, this could break out, and if you're short, you better be careful, because this stock is acting well, and here's your prior pivot, here's your prior high, and that's 194.90.
And Kihu as well, looking good, holding in well, especially not only just in terms of our markets, but also in terms of Chinese stocks in general, showing leadership there. So relative strength on numerous fronts.
And combine that with a powerful channel, and it could be big. And I know some of these Chinese stocks are hard to trust, so maybe you just want to go out 3 months, 6 months, and buy in the money calls. So this way you know what your premium paid is, or your risk. And if you go here, yes, the stock had a really big move, okay, last year, but look at the size of this consolidation. And now look at it right near highs. So intraday, maybe we get a good trade, and it's been, it's tried so many times. There's talk that Alibaba is going to invest in it. There's been so many different stories about this, but either way, there's money behind it. So with that being said, you have, what is this, 94.38. Here's 96. It gets above 96. Anyone who short this thing probably will be worried, and anyone looking for a breakout could be adding in. So maybe you want to buy 6-month out $100 calls, or $90 calls, or maybe in the next 2 weeks if you expect it to happen in the next day or so, or just trade it. But either way, this is a nice tight pattern showing relative strength.
And over on Apple, the damage largely seemed to be contained after the company's disappointing earnings or numbers, but the stock closed off of highs despite Icon's tweet in the morning. So what do you think about Apple heading into today?
Well, Icon's tweet, the more you do it, the more, I guess, luster it loses. With that being said, I actually bought on that thinking it would go higher, and I lost money, and now what you have here is a doji. You almost have the opposite in Netflix. I'm not saying it's going to continue to the downside, but if you go here to Apple, you will see you have this big trend, okay, that it broke below on the disappointed earnings that I think the analysts screwed it up by raising all their guidance. Either way, they made a lot of money, but that being said, I'm just going to let the chart speak for itself. Here is a huge gap. This is a big, big gap. Two things are going to either happen. Either one, we're going to go a little sideways, and then they'll say that's priced in, and we'll trade into the gap. So there might be a nice trade above 515 for those who weren't caught, which I don't think many of my traders take it into earnings anyway. Or it goes sideways, doesn't fill this gap. This gap is a blaring hole in the stock, and that creates more downside, and then all of a sudden we take out 502 for a short, and then we head down to the this 200-day moving average, which is 483. So that being said, you could base a lot on this doji, depending on which way it resolves. Might take 2 days, might take 5 days, might take 1, but it'll be on the radar. Just don't overly trade it.
And over in social media, Facebook bounced well, rallying 3%. We do have its earnings after the close today. I know you don't typically take stocks into earnings, so what will you be watching?
You know what, I'm not even going to do options on this one. I'm going to try and trade it after. Same way I remember going to Apple. I took options that were worthless. I was like, above 560, it's a buy. Below 530, maybe you get short. Same thing goes here with Facebook. Facebook overall has been a really nice trade from 2 quarters ago. We talked about this, this cup and handle pattern. We won't get into that. It's been trending, holding this area here. If the numbers are really good and it starts to go, maybe you buy a little bit after hours, and then you could add to it if it were to take out and trade above 58 or 59, but it has to stay above. If you're looking for a breakout and you think the numbers are good and it gets above 59.5 and you're in there long and all of a sudden it gives it back, kind of like what it did last quarter, you don't stay with it. If it holds, maybe we get a good momentum trade. If the numbers are in line or a bit light, then maybe you look to get short and it breaks below 51.85. That would be a level, and if it broke below this trend line, then it really could discount. So I would say no, resistance 1, resistance 2, support 1, support 2, and figure out your time frame.
All right, coming up, we're going to go in the trenches with stocks that perked up yesterday. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back at Going in the Trenches with some stocks that perked up yesterday, starting with some banks. The banks had nice action yesterday, a bunch with what Scott likes to call a day one, including one of your favorites, Bank of America, which led the banks yesterday.
It did, and you know what? I didn't go with that one because of the talk about their, the probe into their trading. So I went with the XLF to play the bounce, but this one ignored it. So with that being said, you look at the chart of Bank of America. Bank of America only came in through the 21-day, where the XLF, I think, went all the way down to the 100-day. So this bank within the group showed relative strength and continued relative strength like it's done for the majority of the past year. So with that being said, I would say continue to have this as one of the best banks. So with this being said, maybe it goes a little bit of sideways. I would say as long as it holds now above this, just say 1637, and you see some, some commitment to that, at some point maybe this downtrend gets broken, and then if it does, you'll know that the market's acting a bit healthier.
Right, and Goldman Sachs looks like it was trying as well, trying to reclaim the 100-day. Did close on highs though, so this will be on your radar today, I assume?
Yes, but this is the opposite of relative strength, and this showed some relative weakness. So, I actually went with this in the afternoon, just to show you, look at charts and, why you want to be where the strong ones are. This one, broke out, okay, and couldn't hold it. So with that being said, you had two levels. This was your breakout right here, and then this is when it failed, and it's already into the base. So with that being said, this bounce might not be as powerful, but if it were to get, I guess, above 167.60, maybe you see a move back to 170. And if this can't do anything above this for a while after this move lower, you'll know that this bank will be in a void alongside maybe even Citigroup that had one of the worst reports out of all the banks.
Right. Well, solar stocks also perked up yesterday. Solar City had gains of 6% and it has really been showing some relative strength there. So being as it closed on highs today, maybe we'll get some more action.
Yes, and again, there are stocks that show relative strength when markets correct, and that's usually the beauty of a correction because you find out where the leadership goes. Solar City, big leader in the solar group last year. This only came down to the 21-day when the markets came down almost to the 100-day in every sector, so that did show you that buyers were stepping in while people were selling the market. Closing the highs, probably up a little bit pre-market, I'm not sure based on where the futures are, but above yesterday's high of 74.13. And then, it could be on its way back to the highs here. Not a lot of stocks are making new highs of 2014, so don't overly get excited here, but this is in the game.
All right, well, along that relative strength theme in the solar group, CSIQ also rallied about 6% and was able to reclaim both the 8 and 21-day yesterday.
Yes, these two are pretty much, I think, the ones that you want to go to when you're in a corrective phase. Sometimes when you're like just trending and markets making new highs, you could be in like second tier, third tier, fourth tier names in a group like the solars. As of right now, though, CSIQ and Solar City seem to be the best two. This held the 21-day bounce back up. It couldn't mean more time. Like, don't just be buying highs. You don't know here, but these two are the ones that I would watch to see if any kind of attention and strength comes back to the solars.
And the metals hung in there yesterday as well. And we know that all eyes tend to be on gold on Fed Day. So especially being as gold has held up so well so far in 2014, we should put our eyes there today, right?
Yes, and it seems like it's at another inflection point. A lot of people are talking about the inverse head and shoulders pattern and how it could relate to higher prices. As of now, slow and steady for the bugs. They're not flying high yet, but they've made some movement. So here is the double bottom across the board, so to speak. Here is your new trend for 2014. Yesterday, it did hold higher and reverse. It's up a little bit. If the Fed comes out, and the gold likes what it hears, this will be your spot, 122.50, above 122.50 with authority, with volume, with conviction, and a close above there. Maybe you could see 127.40-ish on the GLDs.
All right, so wrapping it up for us then, your words of advice as we approach that 2 o'clock marker when we get that Fed rate decision.
It just, it feels like the market's a little different. Last year, that the correction that we've already had, that was it. So anytime you tried to short a bounce, they got grinded to new highs, so not many people want to do that. This year, I think the market's still trying to find an identity, and we do have some spots to trade against. You have that 1772 now in the S&P. We had a day one, we're off a little bit. A little weird that we weren't able to hold the overnight gain, so that just shows you how temperamental maybe the market is right now, as we were up 30% or so last year, now we're only down 3% or so, so it's not really that much yet, especially with everyone hounding that we're going to be 10%. So today, Fed day is always a little bit tricky or shaky. That first hour, it goes back and forth probably 10 times, and each move is fake, so maybe you want to fade each side of it, and then sometimes you get a trend move in the last half an hour. At this point, I couldn't really tell you which way it's going to go. Things feel a little bit more vulnerable than stronger. There are some things to stay with from the long side. I tried to identify some strong patterns that if we do hold in there, where the relative strength could be. And I would just say a little bit more of low gross, low net right now. You had your oversold bounce from 177 back to 180 after hours yesterday. Now you need to figure out if it can continue or, that was it.
And with that said, that's your morning call for this Wednesday. Happy trading. Have a great day.